Hello and welcome to the weekend chart review. I'm Zenia Taubina, and in this quick video, we're going to review the 6 daily charts that I analyze as part of the weekly service. And hopefully it's going to be helpful not only to the weekly service members, but to others dealing with these rather dynamic markets. So let's begin with the S&P 500. So the last week, what we experienced is we had S&P remaining below resistance noted in prior week's video and proceeding down to breach the January low. So that's this low. With that, odds are shifting in favor of the segment off of the August low, so that's this rally, to have completed. And once that completes, ideal support will be in the vicinity of the August low. So that's this green box right here. Now, on the way there, we have the yet to be broken 56.51 level over here. So that's this red line here. And for as long as that's holding, there's still some potential for a minor new high before this rally completes. But it's really, with last week's action, chances of that high have diminished substantially. And in order to favor this higher high, S&P would need to get above this red line over here with the green triangle. So that's 59.86. So if it can get above 59.86, I will favor a higher high. Until then, pressure is down. And on the downside, supports are, as we discussed, this green box would be ideal support. But we also have to keep an eye out for this rising pullback support line over here. So that's currently around 54.70. And ideal support is a bit below that, down to 51.19. Now, while it's not captured on this chart, my bigger picture work has me favoring this low over here, that's 49.53, to hold and produce further highs. So now it was a question of how much of a pullback. It's until and unless this red line over here is broken, I am viewing it as still bullish in the big picture, but last week's action did diminish the odds of immediate higher highs in the near future. Now let's move on to NASDAQ. Actually, to Russell. We'll move on. Okay, here it is. So Russell, as my subscribers know, I viewed it as potentially having completed an impulse up off of the late 2023 low. So that's this low over here. So what that means is that from here, the upper potential for substantial downside did exist. And those of you that are subscribed to either the weekly or the daily service know that I stopped being bullish right around here, 22.59. And the decline that we got is would basically be why. So I saw this as positioning bearishly, at least near term. Now we are at the next support line, basically. So 1993, that's the red line over here, was the red triangle. That is the final support for another extension higher. So for as long as that's not broken, some potential for another extension higher remains to begin to be viewed bullishly, or for me to begin to view the Russell bullishly. I will want to see it get over the 2173. That's this first line with the green triangle. And to make it likely that it's heading for higher highs, I would want to see it over 2326. So that's the second red line with the green triangle. So for as long as it's below this first resistance level, extensions down have good potential of occurring. On the downside, as I noted, 1993 is the next support. And below that, we have 1875 to 1912. So that's this area over here. And so that's in terms of the structure of the near-term decline. And a break below that would be a strong indication of a longer term top. So that's Russell. Now let's look at NASDAQ. Okay, so NASDAQ is more similar to S&P in terms of its stance. The one difference, well, let's first talk about similarities. Just like S&P, it remained below the intra-week resistance, yes, on last week, and it proceeded lower. Unlike S&P, it already breached the second red line over here, so that's 19,938. So with that, it is now likely that the rally off of the August low completed. Similar to the S&P, larger degree stance remains bullish for as long as this red line over here, that's 16,973, for as long as that's holding. So ideally, it will pull back to the green support area. So that's 17,435 to 18,593. Similar to the picture in S&P, we need to look out for potential uh, rising channel to form. Well, either the channel, so that's the first support would be around 19,100, so around here, and then the rising pullback low support, which is at the near the top of the green support area, but rising. So in order to view downside as complete, I would need to see it over 21,350. So that's the red line over here with the green marker. And if that is breached, then I'll favor immediate higher highs, as in the low holds and proceeds to a higher high, at which point would have to figure out how the structure is unfolding and where exactly in the higher highs it's pointing. But for as long as it's below this 21,350 level, pressure remains to the downside, and ideal path would take NASDAQ down to the green support area. Okay, moving on past equities and to TLT. So this is the TLT chart that I've been same or I guess a newer iteration of the chart that I shared last week. Same essence as what I shared last week. Near term, those that are subscribers to either daily or weekly know that I was bullish off of the Jan lows. And last week we did get an extension to reach the target zone for that bullish stance. So that basically resolved the near-term bullish stance and stance. My view is no longer bullish. Now it's in the show me stance. So if TLT can hold 86.86, so that's this red line over here with the red triangle, and push through 94.85, so that's this red line with the green triangle, then it will open up potential for this box above the 2024 high. For as long as this 94.85 is not exceeded, it has a very bearish potential. So there is potential for it to set up for acceleration down after basically remaining in a range-bound consolidation for a year and a half now. So if 86.86 is broken at this point, it would put TLT in a bearish stance. And at a minimum, I will then favor the Jan low to be broken, and then would have to see how that break happens. And some potential for bottoming in the vicinity of the 2023 low. So that is 82.42. So this red line does exist. But I'll want to see that bottoming happening before, rather than assume that it will happen. until and unless we get something constructive in the vicinity of the 2023 low, there is potential for TLT to be setting up for substantial acceleration down. And that potential becomes likely if it then continues below 77.5. So that's this red line over here. And if that happens, then we're looking at 64 to 69 as target for the decline. So we're talking substantial downside potential. So defensive, I'm viewing this defensively at this point. Not yet bearish, but the implications, should it choose to take the bearish scenario, the implications are quite severe. Now, let's look at gold. So this is the gold chart. As of last weekend, we were right here. And at the time, I mentioned that ideal path would be for GLD to bottom in this upper support box and to then proceed to one more high. And from the looks of it, ideally targeting the upper portion of this box. So towards 285. So far, action is consistent with this perspective. It looks reasonably good for that extension higher. And after assuming that we get this extension higher, this segment over here from the November low will be favored complete. And with that, potentially completing a much larger structure to the upside. So what that would mean is that if it completes, and we'd need to see a reversal down to confirm completion, but if it completes here, it will open up a substantial downside potential, which will increase if the November low, and that is 234 and change, breaks, and will be confirmed below 211. So near term, still holding a bullish stance, but inching with every week, inching closer and closer towards potential completion. And reverse, if and when it completes, reversal can be quite violent. So that's something to keep an eye out for. So far, for as long as the 261.25 level, so that's the low that we had in February, late February. For as long as that's holding, it looks good for a push higher. Below this level is the earliest indication that upside may have completed, but a stronger indication that rally of November low completed will require a break of 251 and change. So that's this red line with the red triangle. And then we'll have to see whether vicinity of the November low, so vicinity of 234, can sustain the pullback and then potentially do one more high, or if it slices through that and heads for indicating a larger degree top. Okay, last and least is GDX. So GDX is continues underperforming relative to gold, but still not giving it a clean bearish stance. So for as long as it's holding, well, really holding 38.58, that's this red line over here, potential for another push higher remains. And ideally, that push higher would then reach 42.22. From the looks of it, it would be the lower portion of this red target box, but I would have to wait to see how it gets there before refining it. And that then would have pretty good odds of forming a larger degree top for as long as it doesn't exceed this 57.57 level. So in the meantime, if it reverses below this red line here, which is 39.41, odds will shift in favor of a corrective bounce having completed. And that would basically set up for a break of the late December low. So that would be 33.42. So really at this point, ideally it will push a little bit higher, but any faltering here could potentially set up for cascading down. So also viewing this one defensively, similar to, well, similar in the sense of positioning STLT, and less bullish than GLD, even though some potential for higher does remain. So that's it for this week, folks. Thank you for joining.